Howdy who, all my stock market gamblers. Welcome today. It's Monday. Stock market's open January 11th. I'm Tall Mike. What's going on today? Well, we got a little dip on the open, right? We were down 200 points on the Dow, a couple hundred points on the Nasdaq. We're already starting to come back. We're in the mentality of a marketplace where you want to buy the dips. The dips are always meant to be bought and then the market goes higher. Now, does anyone else miss the free market system? Now, a lot of you millennials, you might not remember what free markets were because the market has died, okay? It died in 2008 during the great financial crisis, right? Ever since then, we've been a debt-driven market. Now, the debt-driven market, what is a debt-driven market? Well, our market, basically, the worse the economy does, the more debt we're going to pump into the marketplace and the higher the stock market's going to go. So we got an economy, the worse it does, the higher the market goes. It's kind of it's the inverse of what is normal. But in the last 12 years, this is how it worked. Okay, the Federal Reserve will not let the stock market drop. They cannot. They need tax revenues in the government, and they're going to pump in more money into the stock market and keep the markets going higher. And it's a great game as long as it lasts. Now, how long will it last? It'll last until it stops. But right now, the market's going higher. It's going to go a lot higher. We're going to break through the 40,000 level on the Dow. We're at 31,000 now. We're going to get through the 40,000 level before this market breaks. At least that's my prediction, right? Okay, so the worse the economy does, the more debt that's going to be printed. We print debt. We don't have money, and we're going to inject that into the stock market. We're going to get the stock market to go up. Now, in this backwards world we live in, it's almost like the more debt a company can take on, the higher their stock price will go. Isn't that weird? The more debt. If a company has access to a lot of debt, they can keep borrowing money. And you know what they can do with the money after they borrow it? They can buy their own shares back. That's been the pattern. Borrow the money, buy your own stock, and that definitely makes the stock go higher, even though you owe a lot more money. Debt doesn't matter anymore. Debt does not matter. Don't worry about debt. Nobody's worrying about the debt. The debt's at what? $28 trillion? The Federal Reserve, they've already got on their balance sheet another, what? They've got $7 trillion, and that $7 trillion is going to go to $10 trillion, $15 trillion, $20 trillion. And it's going to do it relatively quick, and it's going to inflate all assets. It's going to make much bigger problems. They don't see the problems that it creates. Maybe they see them, maybe they just don't care. It makes people homeless. It makes houses go up. Houses cannot go down. If houses go down, this whole thing will collapse, and they cannot let houses go down. You know how many mortgages the Federal Reserve bought just this year, in 2020? $1.6 trillion of mortgages. They own more than that. They own 1 out of every 3 mortgages is owned by the Federal Reserve. They cannot let the markets drop. 5 million people, 5 million are not paying their mortgage. But hey, it's okay. We got forbearance. How long is forbearance going to last? Well, if you started forbearance today, you can do it for a whole year. So it's going to last into 2022 before these 5 million homes start getting dumped onto the market. But some of them started forbearance earlier, and in theory, they're only allowed a year of forbearance, okay? After a year, they fall off the forbearance. Some of them start in March, and they'll end in March. And those homes will start to get foreclosed on and come onto the market. Now, they can just kick the can down the road and say, we're never going to let the housing market come down. We're never going to let the stock market come down. You know what we're going to let come down? We're going to let the dollar come down. But you know what's interesting today? What's interesting today is the dollar, it's been going like this, but it's kind of had a knee-jerk reaction up today. Now that's fascinating to me. Now, okay, normally when it has that reaction up, which is a pretty good up move in the dollar today, so far it's early, but what normally happens to gold and silver? Well, they drop. Gold and silver didn't drop today. They're staying flat, with the big move up in the dollar. This tells me that gold and silver are a gift. Now, the gift was given to us last Friday when they just pummeled the gold market, pummeled the silver market. You know what they pummeled it with? They pummeled it with paper. You see, there's what's called derivatives. Now, for example, an option is a derivative. Now, if you were to buy an option on Apple stock, the Apple stock would determine the price of your option. If the stock goes up, the option goes up. Okay, stock goes down, the option goes down. Those are derivatives, okay? Now, what we got in the silver market, in particular silver, also the gold. Anyways, we got the derivatives. Now, there's real gold and real silver, but there's also derivatives. Derivatives are the SLV and the GLD. These are paper. These are paper assets. They're not real. They're paper. But what's funny about these markets is the derivative is determining the price of the real physical gold and silver. Because you know what they can do? Okay, JP Morgan can dump as much SLV on the market as they want. It's paper. It's not real. It's paper. Do you realize that the SLV is not silver? If you think you own silver when you own the SLV is the ETF that follows silver. But now that SLV got hit on Friday. SLV got hit with so much paper that it just dropped the price down $2, $3. And what came down with it? The physical came down with it. Was there more physical coming out of the market? No, physical is getting very rare. Do you realize for every 1 ounce of physical silver, there's 100 ounces of paper silver? So 100 to 1. So there's 100 people out there that think they own silver. They don't own silver. They own paper. And when the musical chairs stop and everybody wants their silver, 99 out of 100 people are going to be wiped out. Actually, there's actually about 200 paper ounces for every one silver ounce. 200 to 1 ratio. So really, out of every 200 people, 199 are going to get wiped out not holding any silver. Okay, all right, same with gold. Gold's about 100 to 1 paper to 1 ounce of gold. 100 ounces of paper gold, the GLD, and they can hammer that. But it's funny how it's the tail's wagging the dog. The dog is not wagging the tail. The dog is the physical. It's getting wagged by the tail. The tail is wagging the dog around. It's crazy times out there, crazy times. So we want to buy the dips. Okay, now silver's a gift. I'm buying silver and gold right here. That's a gift. But if the stock market comes in, you still want to buy it. It's going higher, going much, much higher. Much, much higher. Buy the dips. Buy the dips. It's been working. It's been working for 12 years. It's not going to stop working. They can't let it stop. Now, what about Bitcoin? Bitcoin over the weekend went from 42,000 down to around 32, where it is now. 42,000 to 32,000. That's basically about a 25% drop in just one day. Now, it could drop another 25% today. Bitcoin is very volatile. Where am I looking to pick it up again? I'm looking to pick it up when it gets down around, let's call it 20,000. I think it's going much higher. We hit 42,000. I think we're going to blow through that. I think we're going to hit 50,000. We'll probably hit $100,000 per Bitcoin. But Bitcoin's volatile, and it came down to 30. It's at 32 right now. Is this where it's a buying opportunity? Because it's going to go higher. But I think it's got more to drop. I do. So I'm waiting. Maybe I'm wrong. Maybe it'll just shoot right back up. But I'm waiting. I think it'll get down to around 20,000. And that's where I'll pounce back in on. I'll just, hit it again and we'll ride it back up. Now, I so miss the free markets, but apparently we're not going to have those for a while again. Now, can we have a free market again? Of course we can. How do we do it? We get rid of the Federal Reserve and we got a free market. Now, everybody thinks the Federal Reserve is government. Federal Reserve is a private corporation. They're not the government. They're a privately held corporation. The Federal Reserve, they're no more government than Federal Express is government. Federal Express has nothing to do with the government. Anyways, the Federal Reserve, they got nothing Nothing to do with the government. If we got rid of the Federal Reserve, I don't know why we give them so much power. They're the most powerful corporation in the world. And they're privately held. You can't buy stock in them. Otherwise, I would invest in them because they have free power to print all the money they want. Why do we give them that power as taxpayers, as U.S. citizens, as the government? Why do we give that power away to them to destroy us, destroy the dollar? We got to get rid of the Federal Reserve. We just got to stop it. Now, you got a president coming in that he loves the Federal Reserve. He might even be working for the Federal Reserve for all I know. He's not going to wipe out the Federal Reserve. He wants it. He's going to print money. So we got at least 4 more years of this money printing, and the market's going to continue to go higher. Now, granted, it's all going to break. It's going to come tumbling down. I guarantee it. It's going to crumble. It's going to crumble. You cannot print your way to prosperity. Countries have tried this time and time again. They tried to bring in socialism. Like the new president wants to bring in socialism. Now, the old president, he was starting to be a socialist himself. He was printing more money, more money, more money. We got to get a president in there that wants to get rid of the Fed, that wants to get back to sound money. That is so far away. We have to have the big crash first. We have to have people feel so much pain that they want to go back to sound money. Right now, nobody wants to go back to sound money. They want stimulus checks, more stimulus. Send me mine. Send me more money. Oh, yeah, it's a crazy world out there. Crazy world. But yeah, I'm looking to buy the dips on the stock market pullback. I'm hoping for a bigger dip. We had a 200-point dip, but I think we'll get a bigger dip. Buy the dip. It's working. I'm Tall Mike. I'm a stock market gambler. Get out there today, do some trading. We'll talk to you all real soon. Bye-bye now.